Mastering Bookkeeping Basics, Bookkeeping Records. What documents and records are used to properly perform bookkeeping? The transaction is the starting point for any accounting record. Transactions are recorded in the bookkeeping records based on source documents. Bookkeeping records. Bookkeeping records are essential for businesses to be able to track their financial transactions accurately. There are several types of bookkeeping records that are commonly used to maintain financial records. These records help businesses keep track of their income, expenses, assets, liabilities, and equity. Here are some of the main types of bookkeeping records. Common bookkeeping records. Chart of accounts. A coded listing of all the accounts in the general ledger. General ledger. A book or computer file containing the accounts and balances for all of a business's assets, liabilities, equity, revenue, and expense accounts. Subsidiary ledgers. A separate record set up to record the individual items relating to a single general ledger account, control account. Examples include inventory, accounts receivable, and accounts payable ledgers. Journals, a preliminary record where business transactions are first entered into the accounting system. The journal is commonly referred to as the Book of Original Entry. Specialized journals. Journals used to initially record special types of transactions such as sales, cash disbursements, and cash receipts in their own journal. Trial balance. A worksheet listing of all the accounts appearing in the general ledger with the dollar amount of the debit or credit balance of each. Used to make sure the books are in balance, total debits and credits are equal. Fixed Asset Register. The Fixed Asset Register maintains a record of all fixed assets owned by the business, such as property, equipment, and vehicles. It includes details such as acquisition cost, depreciation, and current value. Worksheets forms which are used to summarize all the information necessary to complete the end-of-period financial reports and prepare other financial analysis. The formal financial statements, the balance sheet, income statement, and cash flow statement summarize and report the results from all the other accounting documents. Source documents. These documents provide proof that a transaction has occurred. They are the original records that provide evidence of a transaction. They are crucial in the bookkeeping process as they serve as the foundation for all financial data entry and analysis. These documents are used to track and verify transactions, ensuring accuracy and transparency in the accounting records. Common types of source documents. Invoice, a business document showing the names and addresses of the buyer and the seller, the date and terms of the sale, the description, quantity, unit price, and total price of goods purchased or sold, and the method of delivery. Selling business refers to this document as a sales invoice. Buying business refers to this document as a supplier invoice. Receiving report. A document originated by the buying business listing the quantities and condition of the goods and/or services received from a supplier. Sales order. A document originated by the seller listing the goods and/or services ordered by a customer and other information such as prices and delivery dates. Purchase order. A document originated by the purchaser buyer requesting the supplier to ship goods or perform services. Receipts are issued by a seller to a buyer as proof of payment received for goods or services. They typically include details such as the date, amount, and method of payment. Checkbook, formal record of all checks written, deposits, bank charges, and miscellaneous charges and credits. Check, a written order directing a bank to pay cash from the account of the writer, drawer of the check. Bank reconciliation. The process of bringing the checkbook and bank statement balances into agreement. Bank statement. A copy of the bank's record of the business's account showing the balance of the account at the beginning of the month, the deposits and payments made during the month, service charges, and the balances at the end of the month. Tax returns filed with government agencies. Payroll records. Payroll records document employee compensation, including wages, bonuses, deductions, and taxes withheld. These records are essential for calculating payroll expenses accurately. Expense reports. Expense reports detail business-related expenses incurred by employees for reimbursement purposes. They provide documentation for tracking and recording business expenses. Loan documents. Loan documents provide loan details such as interest rate and payment terms. Contracts. Contracts outline the terms and conditions agreed upon between parties involved in a transaction. They serve as legal source documents for financial transactions. Well, that covers some of the common records and documents used in bookkeeping. See you next session.